Hey guys, it's Dave here. Welcome back to the channel. First of all, I just want to say sorry I wasn't able to live stream Rocket Lab's Q1 earnings call. I really wanted to. I mentioned in a previous video I was planning to. Unfortunately, something got in the way and it just didn't happen, so I have to give you my thoughts after the fact, which is what I'm doing today. Before we dive into the details of the earnings call, though, if you're new here, I do invite you to subscribe by the end of the video. I come back with space content and investing content regularly, and every subscriber is very much appreciated. If you're not new here, then of course I'm always interested in hearing your comments, and your likes always help with the algorithm. So with that out of the way, let's dive into Rocket Lab's Q1 results and why I think this was such a great quarter for the company. So starting off with the stock, I'm pretty sure most of you have already looked at it, but obviously the markets overall did like these results. We did have a bit of a bump after earnings, and of course another bump later on, which I think is probably attributed to favorable CPI data for the overall stock markets, indicating that perhaps we won't be seeing many more rate hikes from the Fed in the future, and obviously a lot of growth stocks bump up on that news. So a combination of those things, we did see a nice jump, although in the intraday we did kind of fall off and lose our gains. Remains to be seen what will happen next week, but so far at least, if you followed my short-term Rocket Lab options trade that I made just for fun a few weeks ago, I am up on that now after this move, so I'm looking for a little bit more of a move on that, and of course I still do hold shares long term that I don't plan on selling anytime soon. Getting into some of the news. So first off, I just wanted to pick out some of the new contracts they're getting, the new business that they're getting. So I'm not going through everything that they presented. You're welcome to go to Rocket Lab's investor relations page if you want to check out the full earnings call. Always worth it for investors, I feel, but I'm really giving you the highlights here. So in terms of all these new launch deals and new business we're getting, one of the main reasons I think this was a great quarter for the company. Starting off with, we have a new deal signed with Capella Space, who Rocket Lab have previously launched for successfully, and obviously that does carry a lot of weight in an industry when we've had a lot of failures over the past year or two. This deal is for up to 4 launches, so it could be less, but it's up to 4. And we're looking at Launch Complex 1 in New Zealand is where they're scheduled, with flexibility to move any launch to Complex 2 if needed to meet the requirements. Now, if you don't follow the launch complexes that closely, it's actually better for margins if we launch more from number 1 back in New Zealand. The reason for that is they have much more fixed costs that don't change regardless of how many launches the company gets off, whereas in Launch Complex 2, they have to pay fees for every single launch because they don't own the complex. So honestly, for margins, I believe, in my opinion, it's better the more launches we can get off in number 1 versus number 2. Having said that, of course, the more launches, the better, and I'm not going to turn down any launches from Launch Complex 2, of course, because that cadence is really key for the company's future. So that's a great piece of news for the company, but of course that's not all. We have new major contracts signed in solar solutions, and these contracts are at significantly higher gross margins than what they got with the company when they first acquired Solero. Solero is the division of the company that produces solar panels. They originally acquired them after going public, and they've shipped thousands of solar cells to support upcoming missions like the International Space Station resupply and NASA's Escapade satellites. Now, those satellites are also being built by Rocket Lab as well. So things are looking pretty good overall for the Solero business, and we'll come back to some comments that Pete and Adam said about that in the Q&A section of the call. Another NASA mission has been added to Electron's manifest. I always love to see this, and even better, it's not just a single off launch, it's a multi-launch deal. You love to see these multi-launches. It really helps increase the cadence instead of just having those one-off launches. Another interesting thing about this launch, it's a Starling mission. It was originally scheduled to launch on Firefly's rocket. And after a lot of delays with their rocket, we've seen some issues with, test satellites not getting to the proper orbit and things like that. We're seeing this re-manifested to Rocket Lab. When I originally saw that this was a re-manifested launch, I just assumed, it's probably, either an Astra or more likely a Virgin Orbit, because those two companies went under, where Firefly is still in business. But no, this is actually a Firefly launch that has been re-manifested. So really interesting to see that. And that's another factor I never really thought about, is getting more launch contracts from the likes of Firefly, a company that is still in business but has just had delays. And basically this constellation is going to test autonomous swarm technologies in orbit. I know that sounds kind of like a doomsday scenario, but it's just testing communications between satellite swarms in orbit, and it's going to be 4 small satellites. So really happy to see another launch from NASA. It really seems like if they need something launched, if they need the timeline to be assured, they know who to go to, and it's Rocket Lab. We've seen Astra's Tropics been reassigned to Rocket Lab. Now this reassigned to Rocket Lab. Seems like they'll give the contracts to these aspirational new launchers, but when push comes to shove and they're not ready to launch in time, these contracts are falling back to Electron. So great to see there. And then we have new contracts signed for both dedicated and rideshare launches. Those rideshare launches must have really small payloads, like really CubeSat size if we're ride-sharing on an Electron. But these are for undisclosed commercial satellite customers. I really wish we could see who they were for. Let me know down in the comments if you have any ideas on who these new contracts might be for. We also have several satellites being remanifested to Electron's 2023 launch manifest from another small launch provider. Now, I'm pretty sure they're not talking about Tropics here or that swarm from the previous slide, because they had already mentioned those. So I feel like this is yet another new remanifest from another provider, perhaps Virgin Orbit being the most likely, as they've pretty much gone under at this point. I know they're going through bankruptcy proceedings right now. So yeah, I'll wait with bated breath to see what these payloads are. It seems like Electron is really picking up steam right now, getting a lot of new contracts. The cadence is picking up, and I'm really just extremely confident with the product right now. Then they just talked a little about hypersonics. I won't go into it in too much depth because they announced this before the earnings call, and we're just kind of going over some of it. But it's great to see that the first rocket for hypersonics is already pretty much ready to go, just getting ready at Wallops. And it's kind of a new line of business for the company. They've already got several customers for it, and it's really ready to go. It's not one of these things where you're announcing a new product that might bring in some capital way down the line. No, this is going to bring in money right now. And then we dive into the financials of the quarter here. So we have obviously just under $55 million in revenue. Now, this was actually a beat on the guidance, which was something you always like to see when you're checking the earnings report. We also had a GAAP gross margin number of 11.6%, non-GAAP gross margin 17.9%. Personally, I like to look at the GAAP numbers because I just find it to be more official. This was also well above the guidance for the quarter, so really beating the numbers there for the company. You can't complain with that. Space Systems revenue was above the high end of their guidance. So, a lot of that beat there being delivered by Space Systems, as we are getting used to with this company. In terms of operating expenses, though, these operating expenses were also above guidance, meaning we're obviously spending more than they guided. So it's not all rosy, because although we're making more than they guided, we're also spending more than they guided. But overall, I'm okay with this, as obviously this is money going towards primarily Neutron, but also some Photon. One thing I did find kind of interesting was how often they're mentioning Photon development costs here. I thought that product was pretty well developed, and that's just something I found interesting. These expense increases were driven by addition to R&D headcount and materials and prototyping expenses, primarily in support of Neutron and Space Systems development projects. And then just looking at the cash consumed by the business, because we're still not a net profitable business here. So we have basically $38.1 million in negative free cash flow, aka we're burning $38.1 million, leaving us with $450 million in cash and cash equivalents as of the end of the quarter. So still a pretty good cash runway here. $450 million definitely seems like it should be enough to get Neutron through to the other side of development and beginning operations. But it's definitely a number I will continue to keep an eye on quarter by quarter, year by year, as they continue to develop that extremely expensive product. Now, cash consumed increase was $6.4 million, and this was driven once again primarily by increased investment in Neutron and Photon. Again, I find it kind of odd seeing a Photon investment, but that might just be more production than development. And so what we're expecting for Q2 of 2023 is $60 to $63 million in revenue. Now, that would be versus $55 million in this current quarter, so that would be continued growth, which would be great to see. We would see 37 to 40 million of that being space systems. So space systems still driving the bulk of the revenue at this point, but launch is growing. And they're planning for 3 launches right now and anticipate launch services for the quarter to be $23 million. So the average selling price on those launches is looking to improve as they get back to launching for more of a $7.5 million per launch figure. Interesting to see, though, because we've had 3 launches for the first quarter. We're looking at 3 launches for the second quarter. That's only 6 for half the year, and they're guiding for 15 launches for the full year. So that means they're expecting an extra 3 launches at some point in Q3 or Q4. Now, they are expecting GAAP gross margins for the next quarter to be 14 to 16%. That would be up about 2.5 to 4.5% from this current quarter we just passed. So improvements there on the gross margins will be most welcome. Now, on the, I guess, potentially more negative side of things is that operating expenses are expected to go up yet again. So the spending continues to increase as they're ramping up the business right now. They are expecting operating expenses of $55 to $57 million next quarter and non-GAAP $41 to $43 million. Now, one thing we can see here is that 480 million shares are now outstanding. So obviously some more shares have been issued for compensation packages and things of that nature, something to keep an eye on for sure. That doesn't get included in like adjusted EBITDA or things like that. And then we do have a interest income of $1 million, and adjusted EBITDA loss is actually a little better than this past quarter. By the way, guys, I'm working with a new sponsor today. This is mainstreetdata.com. They have a lot of great advanced charting features for you to check out. If you're looking for a website to give you charts on your favorite companies for investments, I would highly recommend you check out Main Street Data using the link in the description below. There is a lot of great free content there as well as a paid option. And if you do elect to go with the paid option, then it'll obviously help out the channel for the future, and that would be very much appreciated. I definitely wouldn't be selling you any sites that I don't think are actually good or use myself, and this is one I have definitely used myself in the past, so feel free to check it out down at the link below. Thanks so much. And with that, let's return to the video. Now, from the Q&A, there were some interesting takeaways I figured I'd share with you. For starting off, Peter Beck was asked, what's the most limiting factor when it comes to launch? And I think we've all heard the answer before. Customer readiness. The problem isn't the factory pumping out enough rockets. The problem is that the customers aren't ready, so it's more of a demand issue than a supply issue right now. He was asked if the HASTE hypersonics launches were included in that 15 projected launches for the year, as well as how many launches they were projecting going forward. The answer for that is yes, HASTE launches are included, so this is not in addition to previously guided launch cadence numbers. They were also asked when we'll start seeing money coming in from that massive MDA Globalstar contract that they signed, and the answer to that was we're looking at Q3 for a step up in the revenue for that as they start realizing some of those payments. So hopefully some good news for the space systems business coming in Q3 and beyond. Really looking forward to realizing money from that massive contract. And they were also asked if those HASTE launches are the exact same price. They said they're probably a bit higher average selling price than normal, and there's a premium for launches in Virginia, but the margins probably equal out to about a normal launch. They'll just have to charge more to make up the difference. And we did have news around the qualified 2024 relaunch Rutherford engine that they're going to send back up into space after landing in the ocean. Peter Beck let us know that they ran 16 qualification tests with absolutely no problem. So a full length duration burn, as if it went all the way to space. They did 16 of those burns, and they're not seeing any issues with the engine. He says it's a great little engine. So they're looking at maybe 10 uses per Rutherford, just to be on the safe side of things. The engines are the hardest piece, so they're kind of focusing on that first. And once they confirm that the engine does fly successfully again after being used once, that's when they'll look at reusing a full rocket. In terms of the opportunities in space systems, we heard that there's a lot of high value opportunities out there, and also that the management has been quite pleased, quite impressed with Solero's new contracts. The new business they're receiving is going to have much higher gross margin than the old business, so they still have to honor those old contracts and get through them, but once they complete that business, the new contracts they're booking right now look like they do have a lot higher gross margin for the company. There were some questions about the competitive landscape, looking at the future, and Peter basically said he thinks it's very hard for anyone to really get into the small launch space right now, as we're seeing new competitors are falling left, right, and center, where Electron is still just steady as she goes. So he thinks, potentially someone could do it and could make a viable business out of another small launcher, but he does think Electron is kind of going to be the rocket to beat for a long time, and they will have a large part of the market. And it's really just going to be a great business for the foreseeable future. They don't plan on stopping launches of Electron anytime soon. In terms of the medium to heavy market, talking about Neutron, he's mentioned Amazon's Kuiper constellation and said that we're looking at a lot of launches needed in 2025, and that there's going to be, not enough launch capacity by then, which is why they're shooting to be able to launch Neutron by then. Now, having said that, Neutron does not have any launch contracts with Kuiper at this point. They have, Amazon has given a lot of contracts to basically anyone who isn't SpaceX. They've signed a ton. They've taken up a ton of, launch capacity. So I'm really keeping an eye, and I would love to see Rocket Lab get some contracts from Amazon in the future. That would be extremely bullish for the company. We know through a slip of the tongue that they're already making some components for the satellites, so it wouldn't surprise me at all if they could, expand that into launch in the future, something that would be extremely exciting. In terms of what was the biggest grower this quarter, he said Space Systems, probably the Varda Photon that was recently delivered, providing a lot of the revenue. I know we saw pictures of that recently. That's the space factory going into orbit. It's actually not launching on an Electron, but that's the great thing about manufacturing these satellites. They don't have to launch on the Electron, and we still get a product in orbit and get business either way. And then we heard some more comments on kind of the long-term guidance for Electron launches. So we do know we're looking at about 15 for this year. They're still firm on that, even though we're only guiding for 6 for the first half of the year, meaning they'll have to pick up the cadence for the second half. They're still confident about that. And next year, they're looking at 24 launches, but the exit rate for the final quarter will be at a rate of 24 per year. So they'll hit that launch rate of 24 per year by the end of next year, and hopefully do at least 24 following that, although they don't give firm guidance beyond that. But they have observed that they think there could be the opportunity for potentially 30 launches per year in the future. And if Rocket Lab ever really does do 30 launches per year for Electron, that's when you're talking like incredible margins for the business, and they're just making a lot of money, just a really solid business. So I really hope we do hit that 30 number, but even 24, you're looking at they're hitting their targets for gross margins at 50+%. So those were the highlights from the call. I thought it was a really good call. Most of the numbers beat my expectations. The market clearly liked it as well, as we do have a bit of a run up in the stock. We are still seeing the costs increase as well as the revenue numbers, so some things to keep an eye on there. But overall, I'm very pleased with the quarter. I'm pleased with a lot of these new contracts that are being signed. I get really excited anytime there's a new NASA launch, and it's just a lot of new launches being signed. So exciting times for the company. I do think they're really firing on all cylinders right now, continuing to grow. We're seeing future growth forecasted for the next quarter, and we'll have to wait to see beyond that, but it wouldn't surprise me for that growth to continue. Now, I am planning to make a future video and show you a lot more nice charts and stuff like that, but I really just wanted to get this one out as quick as I can. I've been really busy lately, so I haven't had a lot of time to, you know, make a lot of the cool looking charts and stuff like that, but look out for that in future videos. I'm also going to have a future video thinking more about neutron launches and that 2025 time horizon we're looking at. I think the more I think about it, the more it looks like 2025 could be, you know, the year for Rocket Lab stock to really realize its potential. That's when you're looking at Electron should be getting that full 24 plus launches and really becoming extremely profitable. That's when Neutron is going to start launching and hopefully contributing, and the expenses of Neutron development should phase out as it hits operations. Let me know what you thought of this quarter down in the comments below. I'm definitely interested to hear any other perspectives you might have. If you've made it to the end, thank you so much for watching. I do invite you to continue the discussion in our Discord server down in the comments below. I hope you have a great week. I hope the stock market is treating you well, and I'll see you in the next video. Bye for now.